If you are a senior, an immigrant, a green card holder, or anyone filing taxes in the United States, a massive IRS shift is coming in 2026 that could change your financial life forever. This isn't just a minor update to a form. It is a total overhaul of how the government tracks your money, and one wrong move could trigger an audit or even jeopardize your immigration status. Imagine filing your taxes exactly as you have for years, only to receive a notice months later claiming you failed to report assets you didn't even know were mandatory. That mistake could lead to life-altering penalties, and that is why this moment is a financial time bomb for millions. Starting with the 2026 tax year, the returns you will file in early 2027, the IRS is rolling out expanded mandatory reporting requirements on the standard Form 1040. This is a strategic move to increase financial transparency and enforce foreign account reporting. The government wants to know about every dollar, every pension, and every asset you have outside the United States. Under the new rule, anyone 60 or older and anyone not born a U.S. citizen will be forced to answer additional, non-optional questions directly on their tax return regarding foreign bank accounts, pensions, and international money transfers. These questions used to be buried in specialized forms or were sometimes considered optional, depending on your specific tax preparer's advice. But beginning in 2026, they are mandatory. Seniors, green card holders, naturalized citizens, and visa holders can no longer skip these sections. The IRS is also synchronizing data with agencies like USCIS and the Social Security Administration. This means your tax return will be compared against your immigration records with surgical precision. The goal is to eliminate unintentional noncompliance. But as we say here at Tax Hack Pro, the IRS doesn't care if you made a mistake or if you tried to hide something. The penalty is often exactly the same. One of the most significant changes involves the reporting thresholds for foreign financial assets. In the past, many people didn't have to worry because the limits were high. Previously, you only filed Form 8938 if your foreign assets exceeded $50,000, but the new 2026 rule slashes those limits for seniors and immigrants. Now, if you are over 60 or an immigrant of any age, that threshold drops to just $25,000. This change will pull millions of middle-class families into a reporting net they've never had to deal with before. And remember, foreign assets isn't just a Swiss bank account. It includes a small retirement fund from a job you had 30 years ago in your home country, a life insurance policy with cash value, or even a partial stake in a family home overseas. But here is where the curiosity should really set in. Why is the IRS suddenly obsessed with your family property in another country? And why are they linking this so tightly to the citizenship process? To understand the depth of this shift, you have to look at the digital dragnet. The IRS has been quietly upgrading its AI auditing systems over the last 3 years. They are no longer just looking at what you tell them. They are looking at what the world tells them. Through the Foreign Account Tax Compliance Act, FATCA, over 100 countries now automatically send data to the U.S. about accounts held by American taxpayers. In 2026, this data will be integrated directly into the Form 1040 processing system. This means if a bank in Mexico, India, or the Philippines reports an account tied to your name and you don't list it on your 1040, the system will flag the mismatch instantly. The connection between taxes and immigration is becoming a primary focus for the government. When you apply for naturalization, USCIS looks for good moral character. In 2026, they will have a direct digital pipeline into your IRS filings. If you marked no to foreign assets on your 1040, but your bank records or previous visa applications mentioned an account back home, you have created a discrepancy. That discrepancy can lead to an immediate delay, a grueling second interview, or a flat-out denial of your citizenship. Even worse, if they determine you willfully omitted information, it could lead to charges of fraudulent misrepresentation, which is incredibly difficult to overcome. If you want to understand how these agencies are working together before you sign your next tax return, you must subscribe to Tax Hack Pro. We look at the numbers and the hidden traps that most people are never told. So how do you protect yourself from this shift? You have to move from passive filing to proactive auditing of your own life. You cannot afford to be casual about your finances anymore. The first step is a global asset audit. You need to list every single account you have outside the US, regardless of the balance. Even if it has $50 in it and hasn't been touched since the 90s, write it down. Many people think it's just a small savings account for my niece, or it's an old dormant account from my college days. The IRS does not distinguish between a dormant account and an active one. You need the institution's name, the country, the account number, and the highest balance it hit during the year. This highest balance rule is tricky. If your account had $9,000 all year, but touched $11,000 for just 10 minutes during a currency transfer, you have crossed the threshold. The second step is checking your FBAR status. The Foreign Bank Account Report, FinCEN Form 114, is a separate filing that many people forget. It isn't filed with your tax return. It is filed with the Financial Crimes Enforcement Network. If all your foreign accounts combined ever hit $10,000 at any point, even for one day, you must file an FBAR. Under the 2026 system, the IRS will automatically cross-check your 1,040 answers with your FBAR history. If you say yes on your tax return but didn't file the FBAR, or if the balances don't match, the system will flag you for an audit before your refund is even processed. The fines for failing to file an FBAR are some of the most aggressive in the entire U.S. Code. The third step is preparing for the lower Form 8938 limits. This is part of the FATCA reporting. If you have $25,000 or more abroad as a single filer, or $50,000 as a joint filer, you need to start gathering statements now. Foreign banks aren't always fast with paperwork, and waiting until April 2027 to get a statement from a bank in Asia or Europe is a recipe for disaster. Furthermore, you must report the value of foreign specified assets, which can include stock in a foreign corporation, interests in foreign partnerships, and even certain types of foreign trusts or estates. The fourth step involves reporting foreign income correctly. This is the pension trap. Many seniors receive a small government payment from their home country and assume that because it's already taxed there, the U.S. doesn't need to know. That is a dangerous assumption. The U.S. is one of the only countries in the world that taxes based on citizenship and residency, not just where the money was earned. You may get a foreign tax credit to avoid paying twice, but you must report the income first to get the credit. If you don't report it, the IRS views it as tax evasion. Imagine losing 20% of your pension to penalties because you didn't know you had to list it on a form. For green card holders, the fifth step is the most vital: organized record keeping. When you sit across from a USCIS officer, you are being judged on your reliability as a future citizen. If they ask about your taxes and you start stuttering or searching through messy piles of paper, it raises red flags. You want a folder that shows every FBAR, every 1040, and every Form 8938 for the last 5 years. Showing that you are organized proves good moral character. It shows you are an informed, compliant resident who takes the laws of this country seriously. You might wonder if this affects your regular U.S. Social Security. The answer is no. Your U.S. benefits follow the same rules as always. The 2026 rule is laser-focused on the money moving across borders. It is about the IRS closing the information gap that has existed for decades. They know that trillions of dollars are held by Americans in foreign jurisdictions, and they want their cut. They are specifically looking for offshore income that has been growing tax-deferred or tax-free. But why the focus on seniors? The government realizes that the baby boomer generation is currently undergoing the largest wealth transfer in history. Many seniors are selling family land back home or receiving inheritances from deceased parents in Europe, South America, or Asia. The IRS wants to make sure that as that wealth moves into the U.S., they get their percentage in capital gains taxes or estate taxes. If you inherit a house in Greece and sell it, you owe the IRS a report on that sale. If you don't and you bring that cash into a U.S. bank, the anti-money laundering (AML) triggers will alert the Treasury, and you'll be facing an investigation. The penalties for ignoring this are staggering. A non-willful failure to file an FBAR, meaning you honestly didn't know, can cost you $10,000 per account per year. If you have 3 small accounts and didn't file for 3 years, that's $90,000. If they decide you did it on purpose, the willful penalty, it can be $100,000 or 50% of the account balance, whichever is greater. For Form 8938, the fines start at $10,000 and go up to $50,000. These aren't just numbers, these are life-savings ending amounts of money. Knowledge is your only shield. This rule change sounds intimidating because it is designed to be. It is a tool for enforcement and revenue collection. But if you are organized and honest, it becomes just another checklist. The people who will suffer in 2026 are the ones who put their heads in the sand and say, "I've always done it this way." In the new economy, the way we've always done it is the fastest path to a government audit. To stay ahead of these shifts and to ensure you aren't falling into a trap that could cost you your citizenship or your savings, you need to be subscribed to Tax Hack Pro. We are moving into an era where every financial move is tracked. The IRS has even hired thousands of new agents, specifically focused on high wealth and international compliance. They are using seniors and immigrants as the testing ground for this new, high-intensity reporting because these groups often have the most complex international ties. Don't be a test case, be an informed taxpayer. Think about the gift trap as well. If you are an immigrant and your parents back home send you more than $100,000 to help with a down payment on a house, you have to file Form 3520. There is no tax on the gift, but there is a massive penalty for not reporting the gift. In 2026, the new 1,040 questions will make it much harder to forget to mention these large transfers. If the IRS sees $100,000 hit your account, but no Form 3520, they can penalize you up to 25% of the gift's value. That's $25,000 gone just for failing to file a one-page information form. This is why we say the 2026 rules are a financial time bomb. The triggers are everywhere. The thresholds are lower. The data sharing is faster, and the consequences are more severe than ever before. The time to start preparing isn't in 2027. It is right now. You need to be looking at your 2025 and 2026 financial moves with a global lens. You need to speak to your family back home and get clarity on any accounts that might have your name on them. Sometimes parents put their children's names on accounts, just in case, and the children don't even know. In the eyes of the IRS, if your name is on it, you own it and you must report it. Stay sharp, keep your records clean, and remember, the IRS is changing the rules, but we are here to help you hack the system legally and safely. You need to be looking at streamlined filing if you've missed things in the past. This is a special IRS program that allows you to catch up on old FBARs and tax returns with significantly reduced penalties, provided you certify that your mistake was not intentional. But once the IRS sends you a notice or starts an audit, you are no longer eligible for these forgiveness programs. The window to fix the past is closing as the 2026 rules approach. I will see you in the next Tax Hack Pro investigation, where we break down exactly how to claim the new 2026 senior bonus without triggering an investigation into your foreign accounts. This is a specific strategy for those who are worried that claiming a new deduction will invite the IRS to look at their international history. We will show you how to be compliant and profitable at the same time. You won't want to miss that one. In a world where the government is looking for every reason to take a piece of your hard-earned savings, information is the only currency that truly matters. We are committed to bringing you the forensic truth about the economy, the IRS, and the laws that affect your freedom. Don't let your American dream be derailed by a reporting error. Take control of your data, take control of your filings, and stay one step ahead of the bureaucrats. Stay safe, stay organized, and I'll see you in the next video. This is Tax Hack Pro, and the audit of the global financial system is just getting started. If you have found value in this deep dive, share it with someone who needs to hear it. Your parents, your friends, your community, they are all at risk in 2026. Let's help them get prepared.